Morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Friday, April 11th. Overnight trade, we have the wheat market mixed, but now currently down around 3 cents. The corn market was also mixed, but up roughly a penny. While the soybean complex was a bit on the defensive, the bean market down in the neighborhood of around 8 cents, the meal market down around $1.50, and the soybean oil market down around 30 points. Overnight news pretty quiet. On tap today, we have the last day of the index rolls, that being the getting out of their nearby positions and putting them either into the July and or the November contract. So that'll be exiting here today, and then after the close we'll have the commitment of traders report coming on out, of which we surmise that the managed money specs are still net long across the floor. In other news, we have Egypt in for a tender overnight for optional origin wheat. Algeria was a large buyer of 450,000 tons of wheat overnight, optional origin as well. Going forward in here, now that we're past the USDA reports, weather will be taking on more and more importance as far as crop condition and progress goes. Weather right now still looks to be generally wet over the weekend for the Corn Belt, with a little bit of a break and then perhaps some more rains coming back at the end of next week. So we're in kind of this wet and or cool pattern, which is kind of, as far as traders go, like to see a little bit better weather develop here to try and get the corn crop in more timely, although we're not at any type of great shakes at this point in time. And then also for the winter wheat crop, trying to get its progress and or condition on a little bit better footing. Other than that, we also continue to monitor China's situation as far as their import needs. They continue to have the rhetoric on the wires as far as trying to wash out bean imports. That has a backdraft into South America basis levels and their supplies into them as they're harvesting, trying to figure out what to do with these bean supplies. And readily, the U.S. is in need of them after our last USDA report showing the tightness of our beans. The import parity gets better and better with the South American basis levels working lower, along with ocean freight, and us where we're at with our basis levels. It continues to open up the door to solve our tightness problem. It's just a matter of mechanically getting it done. So it's kind of funny that prior to the USDA report, we had the funds getting long. We had worries about the supply and demand tables. We had worries about trying to get the crop planted. All that has come and gone with the USDA reports, and now as we are past them, once again, if we get our crop planted, up and growing, we find out that we're able to solve our tightness problems, and South America has their crop ready to sell, along with China not in need of any grains. We wonder if these rallies that we've seen over the past weeks and or months are readily sustainable. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.